I'm Darius McDermott. Today I'm here with Roger Skeldon, co-manager of the Time Commercial Long Income Fund, which is elite rated by Fund Calibre. The Time Commercial Long Income Fund invests in ground rent and long leases. Could you tell us a bit more about what they are?
Sure. It's very different to a traditional commercial property fund. What this fund looks to invest in is property where essentially there's a long income stream. So that means a long lease to a strong commercial tenant, which we refer to as long lease, or what we refer to a commercial ground rent, which is a slightly different structure, but essentially looking to achieve the same thing, which is a very long income stream, rent paid by the tenant over a long term.
So that's that nice long length, which makes that income secure and predictable. Absolutely.
It's also, what is really important to understand is the tenants themselves and why they want to be in that property. It's really important that they have access to that property for a very long period of time, and that's why they want to take that long lease. So when they enter into a lease, one of the key sort of differences between long income property and more traditional property is that the rent, and the way the rent is reviewed, is a different structure. On traditional commercial property, the rents are often linked to open market value. Yep. So that means the rents really can go upwards and downwards depending on the market conditions at that time. For long income property, the tenants are looking for a bit more certainty and understanding of where the rents may be over a 20-year, say, period. So often you find the rents grow in line with inflation, RPI or CPI, or even a fixed percentage. For example, one of the rent reviews may say increase by 2% per annum every 5 years or every year.
And what sort of sectors do you invest in?
So a really diverse range of sectors. I think what's key is what tends to be long income property is in sectors and in assets where the tenants really want to be in their properties. So one of the key differences there is that these properties are quite often of really strategic importance to the tenants and what we refer to as operational properties. So that can be anything from, say, a supermarket or a logistics property. Hotels is another good example. So these tenants are in this property, but they also operate their business directly from that property. They provide a service and they or sell things, and are really important to the tenants themselves that they're in this property for a long period of time.
And I know you've touched on it, but the process of the fund, I think, it's about the tenant and the relationship with the building. Is that fair?
It is. So when we look to buy a property, it's quite different again to traditional. You're looking to get a real strong understanding of what your tenant is looking for from the property. So quite often these properties are very much purpose built for that tenant themselves. Supermarket again is a really good example of this. There's a design that the tenant's looking for. But what is also key when we invest in these properties, obviously the long lease is essential. The financial strength of the tenant is really key for us as an investor, but also to understand the needs of the tenant. What is the local area? What's the catchment area? Why does that tenant want to be there? Because what we're looking to achieve is not just certainty over the lease term, over the 20-year period, but we're also looking for this tenant is very successful in this property. We want them to sell lots of goods, whatever that may be, and that means after the end of their initial lease, then they'll sign up to a new lease, and that's where there's really sort of certainty or improvement in returns for our investors.
And people who've owned commercial property funds in an open-ended structure will know that it is an illiquid asset, and at times of stress, whether that be post a Brexit or in fact recession, that it can be an illiquid asset class. How have you managed to get through that sort of tenant nature that you have? Has that made a difference to you?
I think the messaging of what we're looking to achieve is different for us. There's no doubt that commercial property especially, is an illiquid asset class, and it takes weeks or months to buy and sell property. So we understand that, and it's really important that our investors understand that as well. Investors into our fund, because of what we're aiming for a long-term income stream, and also looking for low volatility and more security on that income over a long period of time. So this investment is a medium to long-term investment, which promotes long-term hold, which helps with liquidity management. But there's no doubt if you have times of stress, decisions can be made from investors that they would like to get their money out of the fund and carry on and keep their money elsewhere, that is their decision. The fund has lots of different tools which can help it manage that. We always look to hold significant cash levels, and typically between, say, 7.5% and 12.5% of cash in the fund. But ultimately, like any property fund, as we've seen over the last few years, if the fund needs to suspend and stop redemptions, that has to happen, and you just have to sell properties at that point to make sure investors are paid out the cash.
But you haven't actually had to close your fund at any of those stressful periods in the last 10 years, have you?
Correct. We're a relatively new fund. We've been going over 5.5 years, but we've never had to suspend the fund. We hope that that's because the messaging that we give to our investors
Of that long-term nature.
of that long-term income stream. That if you're looking to hold something during sort of uncertain times, then this is the kind of investment that you should look to hold.
Roger, that's great. Thank you very much. For more information on the Time Commercial Long Income Fund, please visit fundcalibre.com.